Okay. Obviously a little tight. Just waiting on YouTube here. You know, I don't know if it was caused by Chrome upgrade last night, but my computer that I'm running the chat off of and different stuff was like going on and on and on, like it was working something, and it was like a Chrome upgrade. I don't know if that was to do with it, and it's a little slow here. Be aware. You see it. Okay. So why is this doing that? Hold on. Unmute. I'm getting an echo. All right. So request to look at NVIDIA, a put spread. Few things that jump out at me. Yesterday was a pretty bullish day in the market. It didn't go up. It tried to, and it failed. So relative weakness. I like the run up that it had. I like the bottoming tail. And it should have held on to the gain. So this pattern, I could see turning around. I would actually expect it to turn around. But yesterday's price action is definitely flies in the face of that expectation. So my reason for thinking that is the strong run up, the pullback. I love the lower low here, and then the bottoming tail that says buyers just loved it on the dip. And it came up, and so this would be the area, if you can kind of envision a head and shoulders kind of a bottom, and you can see here on the 60-minute, that being the head, and this would be where the shoulder should form. So while there's a void of support below here, based on that prior, that prior strength and this price action, buyers should be willing to step up here and even in the face of this topping tail, turn it around. Now, any expectation of a price comes with proof of it actually happening. So, as I've said here before, we look at price action. We have after you study enough price patterns, you have, let's just say, a historical data bank of memory in your head of what price patterns typically do. So when I say that this should do that, it's based on that. So even having one negative day like we had in the broader markets day before yesterday, while it was negative and I recognized it as such, I discount it. And now if it would have went down another day, of course, I would have said, well, something's out of whack here based on historical price patterns. But yesterday turned it around, and it did what it should have done, negating excuse me, that down bar. Now, news aside, we know that this market is just full of news day to day that flips it back and forth, but you always kind of put it in perspective of historical, technical analysis, 101 approach, being that the mindset is that, the markets are all knowing, and you look at multiple time frames, and the chart is what you have to focus on. And, sometimes things do the unexpected for sure. But, in the market yesterday, it was supposed to be, a turnaround day or close to it. And that happened. Now, with NVIDIA here, having that relative weakness, and semis have been a little questionable, even though this one has been a leader, this thing should be a turnaround day today. Now, the markets at the moment are a little weak, kind of neutral after yesterday, so not a big deal. But why were sellers aggressive on this yesterday? That's a concern. So a put spread at a 270, 267, you're going to start feeling some pain here if this thing doesn't turn around. So there's a void, and it has to create support and get itself turned around here, or it's not going to be pleasant, to put it mildly. The loss is going to begin to build. So that's what I see here. And so now we'll just see, if the market can continue to show yesterday's strength. And, as we look through that, just generally, I think, because again, historical patterns, today may be a consolidation day, because overall, the markets here have not been, on fire, so to speak. It's been in a bit of a correction mode. And we discussed, yesterday, the price pattern and the uptrend and the retest, and, this being relatively normal price action in the face of a prior high here, in addition to the NASDAQ having that relative weakness, and Facebook and the FANG stocks, showing some weakness. And so if today is a consolidation day, where, traders and investors are waiting for the next shoe to drop with this ongoing drama, political garbage that's going on. But overall, buyers continue to show up, and that says that there's confidence that whatever's going to happen, the markets, who cares? And all of it's a buying opportunity until some nasty crack happens, and that's not happening yet. So we got a big reversal day yesterday. Big reversal days often result in consolidation days, and we'll see. And it's the same routine, what we do. I mean, our analysis is consistent, and consistent analysis doesn't guarantee being right all the time, but combined with proper money management, you get consistent results. Novices do not have consistency in what they do. And Dan had a great thing that he said the other day. I told him he should write an article on it, where he talked about decision-making within decisions, meaning, okay, here's my plan, here's my stop, and now things aren't setting up the way I thought they would, so let me change the plan. Right? A decision within a decision, and that can lead to disaster. Now, so halfway into the range of this bar is considered normal. In the upper 25% is ideal for a consolidation day, and then we should be off to the races unless we get one more day, which we then look for it to take out the low of the inside day, or what we call a 1, 2, 3, 4, and then blast off. Early in the day, we're pre-market. This bar could turn into a green bar, and sometimes continuation patterns continue on the next day. We don't know. So we look at the intraday charts. So far, bullish consolidation at resistance, consistent interpretation of price action is what we do, right? Correction, deep retracement, that turns into a shakeout. We're up at resistance. How do prices act? Do they drop back down again, or do they begin to go sideways? Going sideways shows that there's strong demand. If this dip turns into a micro shakeout, that's continued bullish price action. Sideways here in relation to this recently created price action continues to suggest that prices are going to go up. And so that's our plan based on, or a bias based on, the price action. And as the day unfolds, we sit and look at the charts and say, what is actually happening? And we apply that same type of analysis to whatever we're looking at. We got stocks, commodities, currencies, whatever. The NASDAQ 100 has been weaker. You can see what it is in relation to that prior high. It's below it. So it only came up to the edge of here and backed off, but so far it's holding up. A consolidation day, which leads to the same bias. Potential consolidation day, even more likely over here, based on this weakness, pullback all the way back to major support rather than a pullback to minor support. So could be a W pattern. That's what should happen. You know, to think that the S&Ps are going to rip up to new all-time highs if today in the NASDAQ 100 turned into a nasty, ugly red bar wouldn't be supportive of that bias. So we really have to see how this unfolds here. But so far, it looks like more bullish price action at the moment. So we're staying with that bias, looking for this to continue to improve and eventually work its way to the upside. The September theory of, you know, it being a terrible month, well, we could say there has been a correction, but it just hasn't been some, you know, earth-shaking kind of terrible thing. But yeah, there's been a correction here, especially, you know, here in the NASDAQ 100 and somewhat to a lesser extent in the S&Ps. So it's all okay. Now, in it, you know, it hasn't happened in many, many years where we've had this, you know, people use the word crash a little loosely to get attention, but, you know, some big correction. So, you know, September is supposed to be the worst month. October is supposed to be the follow through to that, where you eventually get the bottom. And then the rest of the year, you know, from the bottom is where, you know, big money can be made. So we'll see what happens as we get to the end of this month and into October. But today we're dealing with today. YM had a great day yesterday. It's been leading. So wider range day, broke out of the highs. Last thing we want to do is see it break below this low. This is our major support now that we've got a higher high, and God forbid it breaks below that low today or tomorrow, all bets are off, and probably we see some more downside. So you have your lines in the sand. We are objective. We have two scenarios, and, you know, step by step should stay in the upper half. If it goes down here, it's a problem. Bar by bar analysis. That's how we do it. And so now, you know, I've been saying for a few weeks now that I think a probable scenario would be transports making all-time highs. Check, done. Dow making all-time highs. It's on the way. It certainly looks like it's going to happen based on the price action that we have right now. Option traders betting the farm that it's going to keep going up, and breadth at an extreme, and that is where correction will begin shortly after that. So we'll see if that all comes together, and when it does, we're going to have a warning sign. It doesn't mean crash. It means that risk is rising historically for longs, and something bigger is going to happen at that time, because historically that's what does happen. So we'll see. So far, the idea, you know, the theme is playing out. And bonds down again. They've reached that support level. Wide range bar yesterday. So after a move to resistance, a drop, wide range bar into support, I should say. Typically, wide range bar after a move like that ends the move. So should get some stabilization here in bonds. Does Dow have a habit of going to new lows and new highs while other indices do not? And then Dow goes, you know, Frank, I've seen the Dow lag. It has been lagging. Now it's playing catch up. That often does happen. One thing to think about, generalities about the market, where you have seasonal tendencies, or, you know, the Dow does this and then that does that. So where there are these historical occurrences that have happened, look at the chart and say, are the charts in alignment this time to support that? Same thing with, you know, September being some crushing kind of corrective month. Well, are the market internals are in alignment with that to support that type of price action? So, yeah, Frank, switch your thing where it says two panelists, say two panelists and attendees so everyone can see. You know, they're all, again, well, all of these kind of generalities, as I've said, as to what has happened in the past, and they can be a guideline, but they're just that. Look at the chart and see, does the chart in today's environment support that or not? There are times where August has been a terrible month, and then it hasn't. So you go and look at what is now. And let's continue so Dan can review positions. Crude oil continues to find buyers. It's rather messy here. There's no doubt, but you can see this downside shakeout and this whippy consolidation at resistance, which suggests, right, this price action suggests it's going to be able to go higher. It hasn't done it yet, but that's what the price action suggests. And so energy, we've been talking about energy with this crazy price action that occurred last month with the breakdown that retraced back to resistance, went back down here. Now it's at resistance. So it looks like it's building up a base to where it can go higher. And crude oil, having this kind of price action, assuming that it can move higher from here, that's going to support those energy stocks, and they should be some of the better performers. Gold, just kind of dead in the water after getting a little climactic to the downside. So, we haven't had any interest in this. There's been much better trades, in the bull market, and stocks that have been going up, and ones that have had some weakness with bear call spreads. So at some point you'll be interested in this again. It's just not now. So a little late here, and so let Dan review positions, and so we can get ready.
Hey, good morning, everyone. Yeah, Greg, interesting you ended on GDX, just because that was the tasty trade recommendation today to sell puts on GDX 37 days out, which in terms of, just looking at the pattern, it's not, I like it actually. I mentioned this yesterday. And even in some scans the last 2 days, I was finding some gold stocks. But it's a downtrend on the monthly. It's a downtrend on all time frames, climactic on the weekly. And there's some interesting short-term bottoming action. I know you were talking about GLD, of course, and this is GDX, but, there you have it. So I wouldn't mind selling a 17 and a half, but not for 37 days, for a lot shorter. All right, positions. We're in spiders, we're in diamonds, directional, ITA, Moss put spread, square call spread. There's, a little strength here pre-market, but again, nothing to do. CMCSA, I'm seeing some crazy pre-market prints. Good. That one print scared me. FFIV, we have a put spread that expires Friday. I joined Pat yesterday and did a put spread on Cron, which is going to be up nicely with the sector. Can you believe this? I posted this on Facebook this morning. Up another whatever percent, I said. And, there's been no place to get on board here. I was watching for a retest today, even though it would have to be like a big engulfing or something. But I'll keep an eye on this. Sienna covered call, FTV. We've got a couple. We've taken profits on a bunch of these, just partials, third profits. DXC, ACN put spread, ADP, KMB. We have long stock and a put spread. ITW put spread. Synops stopped out. That was a problem child. And we took our stop. S-Fly, I still have this on my short watch list. WBA, that was from yesterday's scanning. We'll keep an eye on that. Yelp, Greg found in the morning, and I found it again on the afternoon scanning. Gulf Delta, we've covered half. And we're in trail mode to protect those gains. Cisco, I'm going to keep an eye on this with Alex. AMD, I have this as a bear call spread just for Friday. The 34s, 34, 36, or 7, whatever I was looking at yesterday, had nice 10% juice in it for 3 days. Sprint, we found that on our watch list over the high. That looks good. TRXC over the high, and it's gapping over the high. That's on my list. TMOS, that's on our list with Sprint. Dish over the high is a go, and I see prints up and down, but no volume. I can't tell what it's doing. Card, it's on our list. SPWR, we saw on the wide range yesterday. Gapping up again. There's no good answer on the daily or weekly, but whatever the heck happened yesterday, this could be a core trade. It's not going to run to the moon, but look at all this support here, multi-year support. Let's look at some others here. Amazon, a mess. Facebook, a mess. Twitter, garbage. Apple, up a little bit. So Pat, remember we were talking about this into the close, and this morning when I saw this selling off, I'm like, oh man, you got to hold right here. And it did. Based on retracement. I just maintain my bullish bias. I said yesterday into the close, as long as we open up relatively flat without a deep retracement, then over the high, it took a little dive here.